Hello and welcome. You have tuned into the closing trades right here on ET Now. I'm Shrishti Sharma, and yes, talking about the markets, they are recovering from the day's lowest points, but a lot to talk about because it's not just the Trump tariff that is weighing heavy. Amidst a lot of these earnings as well. So let's go across to Snehi, who is standing by to tell us what's really happening in the market. Snehi.
Well, absolutely. Let's take a look at a very interesting move coming in from Nifty today on the back of some tariff jitters coming in. Nifty had broken below the 12-week low of 24,378 at one point of the trading day, but we've seen a recovery of about 100 points, or in fact exactly 100 points from the day's low, and 24,480 is where we are at when it comes to the Nifty. Shy of that 24,500 mark, but optimistic of at least touching that level, given that we still have another 60 minutes left of trade. If you take a look at how the Nifty 50 has performed in today's trading session, lackluster moves coming from that space as well. Not much happening, and in fact 0.4% cut is what we've seen for Nifty 50 as well. Sensex 2 is below 80,000 for the first time in 3 months. So that's a slip that we're seeing. It has recovered, as has been the case with Nifty. So Sensex recovery is also something that we've seen. 80,200 thereabouts is where the Sensex is at right now. And well, BSE listed companies have 5 lakh crores market cap today, so it's been a slight of a bloodbath on D-Street today in terms of the market cap erosion, but it's still trying to recover from the day's low, so at least that is looking good. It's names like Heromoto, Tech Mahindra, JSW Steel, Asian Paints that are doing well in today's trading session. Heromoto is up by about 3.5% on the back of good set of numbers and good management commentary coming in. But other than that, you have names like Adani Enterprises, Adani Ports. Trent, even after a strong set of numbers, has not been able to inch towards the green where it was at one point of the day, but the market pressure has got into Trent, and Trent is also lower by about 2% in today's trade, joining Tata Motors, Geo Financial and Shriram Finance. Sectorally, you'll be very surprised to know that it's actually IT that's managing to hold on to the tinge of green today, given that these tariffs have been announced only on goods so far and nothing yet on services. And on the back of that, some mid-cap IT names are doing very well, case in point being Emphasis, Coforge, Persistent. They are all doing very well in today's trading session. Nifty IT is up almost 0.4%. The other index that's doing well today is the pharma space, led on by Lupin. That earnings momentum and strong management commentary continues for Lupin, so that stock is doing very well in today's trading session. And you have Lupin that's up about 5% and single-handedly taking the pharma index ahead. So these are the only two sectors in the green. What's not doing well is energy, realty, metal, auto, banks, both PSU and private. Nifty FMCG is also on the flat line. So that is what the market structure is looking like right now. Slight bit of a recovery from the day's low, but nothing much to be excited about yet. We still have 60 minutes of trade, so let's see where we end. Back to you.
Well, indeed, but it's been a decent recovery, at least for the Nifty Bank, rather, because at one point in time it was down more than 400 points, but is now holding on to cuts of just 130 odd points. So, yes, great action on the markets. We did start the day on quite a muted note, did slip all the way below that 25,500 mark as well, but still attempting to gain that number. But with this, let me also welcome Gurmeet Chadda as well on the show. And Gurmeet, hi, afternoon. And it's turning out to be yet again a volatile day for the markets. We have discussed a lot since the morning that which sectors will be hammered the most, what will happen to the investor sentiment right now. But help us understand what is looking interesting to you right now. Are you really looking for opportunities to buy the dips? Any particular sector that is looking good to you? Afternoon.
Yeah, hi, good afternoon. So, a couple of things there. I think I don't think so the correction has been that much in terms of price correction as much it has been on sentiment. And if you see Nifty is down from the day these tariff news have come about 4 to 5%, which I think can happen in normal course as well. So we are asking clients that if they have liquidity, maybe a third of that, one third of the cash they have can go right now, and the balance can take time, because a lot of this is something which is beyond your control. Personally speaking, I think this is more a hard negotiation tactic, because the new tariff is technically a tariff embargo, and it will come in only 21 days from now, and between them you have a team coming. So hopefully these are hard negotiation tactics, and in everyone's interest some solution is reached. So we are focusing on things which have very little linkage to the export side and the US side and the tariff side. So focusing on some quality banks where we are seeing, so for example, ICICI NIM was steady. Now, if you see the weighted average reduction in lending rate is about 70 basis points. This is RBI data. on a 100 basis points repo cut, and weighted average reduction in borrowing rate is 83, 84 bips. So after some lag, you will see NIM actually stabilizing, which has been the case for banks. So that should start doing well. Credit growth, ICICI is leading now with 14-15%, gaining market share. We are also adding a mid-tier two bank, which is Federal Bank, along with ICICI in the portfolio, adding some quality NBFCs as well, including Geo, which is more new age, because the cost of fund impact is more immediately visible there. Then we're adding some names in power equipment spaces, companies making transformers, power equipments, which again is very secular. Order book is very steady. And nibbling into names in consumption, for example, Interglobe or Trend and etc. So we are playing it in a way which is more domestic economy focused, where earnings are good and the outlook is also likely to be better, and you are getting some decent price points.
Sure, Gurmeet. Hi, good afternoon. This is Snehi also joining in. Gurmeet, so you've spoken about the sectors that look good right now and could maybe prove to be a safety net given that they're domestic facing. But what about our viewers or investors who do not have a significant position right now and are sitting on cash? Would this dip be as good as any to start allocating money, or would you rather advise them to wait it out till we have some more clarity?
See, typically, cash and courage don't go hand in hand. So once you have cash, sometimes if the market falls, the courage gives in. And there is a famous quote that, every past correction was an opportunity. The current one is a risk. So I would advise a staggered deployment. As I said, maybe 25-30% can go now, and the balance over a few weeks, when this thing plays out. And even in, for example, in Japan's case, this is not India specific. Japan, they almost had a deal with 15% tariff. In morning, we saw additional 15% tariff. So I think it's a ever evolving situation, and my sense is there'll be more sanity after some time, and the effective rates would be lower. So stagger it out, and as I said, also have some exposure to things which are low hanging fruits. For example, long duration bonds. Now you are at about 630, 640 on the 10-year, and repo rate is 550. Now, if let's say we have another 25-50 pips in next 6 months, you're talking about 50 to 80 basis points yields falling, which means you can make a double-digit return in a long-dated government bond. Second, with this kind of leverage being used by US, I also think gold, central banks will start buying gold more in terms of tomorrow, even US treasuries could be a point of leverage. So I think if you have a very balanced asset allocation right now, some exposure to bonds, gold, selectively buying equity gradually, and more importantly, keeping expectations more sane. I think this is not a year where you will make 20%. I think if you're making high single digit, early double digit, I think you should be happy about it. And that is how you have to approach this market and not become very aggressive at the same time, become too pessimistic.
All right, so taper down your expectation for now. And yes, seems like the tariff announcement is something that will be the par for the course going ahead as well. But let me go across to Sharan. And Sharan, very good afternoon. And yes, of course, you have been holding that negative bias, or rather the view on the markets, and we are similar moves at least for today, but a good recovery from the day's lowest point. And especially I believe that has come in after that announcement that maybe tomorrow Prime Minister Modi will chair a meeting to discuss what could really be the action going ahead. But what do you make of the move right now, Sharan? 24,500 is something that is Nifty approaching, and a good recovery for Nifty Bank. Are we in to build on more?
Good afternoon, Shishti. Good afternoon, Sneh. I think an excellent move for 150 points of recovery, I think, in the last 1 hour or so. So I think this is more to do on the back of Trump meeting the Russian president Putin. I think maybe it has an end to the war between Russia and Ukraine. So at least we can skip the additional 25% tariffs that has been put on India. So maybe my anticipation on back of that, I think you can see some kind of recovery. Also, today is the expiry. Maybe some kind of short covering, also a rally you can see coming in tomorrow or the next week. I think the particular move in the last 1 hour has been very good. Nifty was again trading below June's low, which for me, I think is one of the key supports for the Nifty around 24,450 odd levels. Again, very good, 24,500. If at all we see this move, we will see a lot more short covering coming in the next 15 to 30 minutes, and even can take the Nifty another 50 odd points higher. So overall good move. Now a support has been made of around 24,450, which I think is more or less a bottom in the near future, if at all no negative tweet come from Trump, at least in the next 2-3 days. So one more thing, if at all Nifty can recover another 80, 100 points tomorrow. So at least for the week, I think Nifty can do a weekly positive closing. And instead of 6 consecutive reds, we'll see maybe one green after 5 red weeks of our Nifty.
Sure, okay, sounding optimistic. And so is the market right now, almost at the session high, 24,512. So above the 24,500 mark for now is where the Nifty is at. But Gurmeet, want to get your sense on consumption as a sector with so many factors at play, that earnings recovery in terms of rural and urban demand, we've seen that playing out. Also, it's a domestic facing sector, so relatively more sheltered from tariffs and more insulated from tariffs than the other sectors. Are you looking at consumption more positively than earlier now, given that we have so many levers in its favor?
Absolutely. So, for example, we are seeing very early green shoots of rural consumption reviving. We saw that in the commentary of HUL also. You see tractor sales, you see two-wheeler sales are doing better than passenger and CV after a long time. And the crop and the harvest has been pretty good. Monsoon, whenever they have been 5-6% above normal, the agriculture GVA picks up. And I think this is a healthy sign. So we are adding names in rural focused consumption. So we are adding some fertilizer names. We have Coromandel International. We have some two-wheeler and two-wheeler ancillary names in the portfolio, and then we have M&M and some farm equipment names. On broader consumption, we are more, on the discretionary side, which is air travel, hotels. So we have, let's say, Indigo, Interglobe Aviation. We have Indian Hotels and Taj GVK on the hotel portfolio side. And we are looking at some more discretionary names. Even in FMCG, the companies which have a larger food division, I think the problem is coming in BPC, which is beauty, personal care, hair segment. But the food division, look at Marico, for example. The Sapola and the food division did 900 crore top line, growing at like almost 30%. And they're guiding for more growth there, which is Sapola, oats, soya chunks, etc. Even Tata consumer numbers were pretty decent, especially on the food side and the beverage side, which is Sampann. So within FMCG also, more companies on the food side were okay. So I think consumption will do well, and I expect government to give some more sops to, I would say turbocharge the economy, as Mr. Uday Kotak said, and that would further drive consumption. And we have a good festive season and a very heavy marriage season coming up in the second half of the year. So that is something we are looking at.
All right, so those are the consumption plays on Gurmeet's radar. But time now to slip into a very short break. Don't go anywhere. As we come right back, we'll keep tracking the stellar recovery that we are witnessing on the markets right now.
Hi, welcome back to Closing Trades. We've seen that recovery in Nifty, and it continues to be the case because now a new session high is what we're seeing for the day. 24,540 is where we are, and looking very healthy in terms of the recovery that we've seen. But Gurmeet, when we're talking about tariffs, the reason that we've seen this increment 25% being slapped on us is because of this trade that we're doing for discounted crude with Russia. Give us a sense of course, while we don't know where that could head and what India's stance could be going ahead, how would you take a look at the entire oil sensitive sector right now and OMCs, and what should be the approach there?
See, I think OMCs is something it's difficult to price in because the pricing is in the government's hand. So, excise can change, marketing margins can change. But I think there could be some tactical opportunities in refiners, pure refiners. So what has happened is in last couple of months, the Singapore GRM have gone up, from let's say $3-4 to $5-6. Also, no fresh refining capacity has been created quite some time because of the focus on green energy. So I think this could be one opportunity, and diesel cracks are better. So refineries like Chennai Petroleum, which is a subsidiary of IOC, where have a diesel mix more than petrol, the diesel cracks being better can report better margins, and there is no inventory losses like it has been the case in the past because oil is now steadied at around 65-70. Now that's a big if oil prices fluctuate and things happen, then obviously this thesis doesn't hold. So refiners is something tactically you may look at, but in general we avoid PSUs where government decides the pricing because then you can't build in cash flows and EPS modeling when you do long-term investing. So that is something we are looking at. Also, some of the gas names, with lot of efficiencies coming in, may want to look at. But those will be again very tactical, nothing on the long and the fundamental side.
All right, that's about OMCs. But one sector that has been doing pretty well, or rather holding up since the start of the day, is actually the IT pack. Because from the start, we have seen decent moves in select mid and small cap IT counters, but it's the large cap as well which are seen to be participating, because the debate is going on that this tariff announcement for now is actually on the good side. The services, there are no such tariffs, but along with that, we also know the fact that IT as a sector that has been hammered the most of late because the earnings were not that supportive. But Sharan, specifically and only from the technical point of view, any particular IT stock you believe is offering a tradable opportunity at this point in time? Because look at the move, this index is at the day's highest point, and along with that, I see select counters like Wipro, TechM, they are the top gainers on the Nifty 50.
So, Shrishti, in terms of IT, I think if at all a reversal comes in tomorrow, I think Coforge is looking decent. It has retested its 200-day EMA, and today from the word go, it is actually moving up. So yeah, you mentioned it in the morning only. At that time, I was not too convinced about the recovery in IT, but looking at the contribution to the Nifty and the overall market, I think you can see a continuation pattern in the next 2-3 trading sessions. So Coforge is one stock that I can see a reversal coming in. Good reversal of the 200-day EMA. If at all, I think if anyone wants to make a position also today with just a day low stop loss, you can go long on Coforge. I think the price is around 1700 right now, and the day low is around 1630. So similar risk to reward ratio, you can keep and make a long position in Coforge with just 60 rupees or 70 rupees kind of stop loss, and similar targets 1717 and 8040 kind of targets. If a reversal comes, it will be very sharp and very fast. The stock is known to give good returns over a longer period. So I think Coforge is a stock on my radar today.
Okay, so Coforge is a stock on your radar, but another stock that in fact it's very silently inching higher and doing very well and now is at its fresh record high is Fortis Healthcare. Good move coming in on the stock. The stock is up by 3% as we speak. And remember, in the morning we interacted with the management and they were very optimistic on the kind of occupancy that they're seeing right now. And in fact, they've also said that the EBITDA could up higher by 2 to 3% in terms of occupancy. Let's just go across and revisit that conversation before I go to Gurmeet to get his views on the entire hospitals and diagnostics space. Let's listen in to the bite from Fortis Healthcare, the interaction we had with them earlier in the day.
Yes, we expect this momentum to continue. We had earlier commented that every year we expect about 2 to 3% of EBITDA increase, and that momentum we expect to continue this year as well. And that would come on the backing of a better occupancy. We expect the occupancy to become better than this. And at the same time, we are commissioning more beds. 900 beds we are adding this year. Out of that, about 50% we will commission within this financial year. As far as occupancy is concerned, we expect it to be around 72% this year. And as far as ARPOB is concerned, I think that will get moderated a little bit as we go further because it is primarily driven by the case mix change. So definitely we would focus on quaternary kind of care. So we are doing large number of robotic procedures across our network, and we are doing a larger share of oncology business. So these are basically driving the ARPOB. And that trend will continue. However, I expect the ARPOB growth to be slightly more moderate as we go further in the financial year.
Okay, that's the word coming in from the management of Fortis Health. That stock doing well, but more importantly, let's take a look at what's flashing on the bottom of the screen right now. Sources tell us that Putin's visit to India is expected in the end of August. Now, this is going to be a very key event to watch out for, given that we've also had word coming in from the Kremlin today that Putin and Trump are going to be meeting in in the next few days. So both of these interactions are going to be very important to watch out for, given the fact that these extra tariffs have been slapped on us solely because of our trade relation for oil with Russia. So Putin's visit to India is expected at the end of August. So this is going to be important to watch out for, because remember, end of August is also when the US delegation is expected to come to India to renegotiate these tariffs. So these are going to be some important events to watch out for. And let's just also talk about what the Russian stock market is doing right now. That's the MOEX, Moscow Exchange Index, is up a whole lot of 5% after this news flow. So that's going to be a very important development to watch out for. But let's once again pivot to the markets. And Gurmeet, we were talking to the management of Fortis Health earlier in the day, who are very optimistic about the outlook going ahead. What's your take on the entire hospitals and diagnostic space? Are you bullish on this space?
That I like the space, but it's very expensive now. If you pick any, you pick Apollo, you pick Max, you pick large hospital names, they are trading at about 50 times EV by EBITDA. If you take the metric, which is revenue per occupied bed, even that metric is at the peak. So where there's very little scope for any disappointment in earnings. I think one positive catalyst is the Ayushman Yojana, where you are covering senior citizens above 60 up to 10 lakhs now. So India has about 32 crore senior citizens now. Certainly, if you give higher healthcare limits, the spends will automatically go up. So this is a big positive trigger with the coverage coming in. And also people becoming more aware, the healthcare spends tend to go up. I think we are more constructive on diagnostics for now, more looking at the valuations. So we are evaluating Krishna Diagnostics. We haven't have added that in the portfolio. Hospitals, we have Narayana Hrudayalaya, which was much cheaper, almost half the valuation sometime back, but even that has run up because that focuses more on cardiac and more tier 2 towns, which is, you can call it more as a value-added play in hospital. Other than that, we are adding more CDMO names in pharma. I think that's where the big opportunity is. We see a lot of Indian companies participating, so once the Biosecure Act gets passed in US, I think in Indian pharma, especially the CDMO, could see big opportunity. And a lot of companies are doing heavy capex. This capex is very, very lock-in capex. You have a requirement with an innovator, and then you do a capex. So, DVs, Alloris, and Newland, a lot of them are doing capex in next 2-3 years, more than probably they have done in last 10-15 years.
Indeed, that is one of the themes that you are looking at this point in time. But one particular sector, or rather stock, that is buzzing since the start of the day is actually Heromoto Corp. On your screen, a 4% jump even in this market is indeed commendable, because we have been flagging off that the margins were a little better than what we were expecting, at least on ET now. And the recent trigger, of course, remains that the company done in their EV portfolio. But along with that, if we compare the commentary and we look at closely into that, the management is quite optimistic of the industry growth, rather, of 6 to 7% in the festive season, and going ahead they expect the margins to be in the 14 to 16% band range. Though they are saying that in the near term, because of the rise in the raw material cost, they could be at the lower end of this particular guidance, but eventually 16% is the mark that they are targeting for. And not just that, Heromoto Corp, if you remember, hasn't been that export-oriented counter unlike TVS and Bajaj right now. But Heromoto Corp is looking forward to that, and they say that going ahead, they are targeting 10 to 12 priority markets and expect growth of 40% by FY26. Though, of course, that will come on a very low base. But the fact of the matter is that the commentary is really strong. And Gurmeet, just wanted to have your take on the whole auto pack, and within the two-wheeler, which are your preferred bets? Because our technical experts, rather, they have been flagging stocks like TVS, Eicher, which of course are not that far from their all-time highs. But Heromoto Corp and Bajaj Auto, they are down more than 20% from their all-time high levels. What's your sense?
So I agree, Hero has valuation comfort, hasn't done much. We like TVS more. It's gaining market share across terrains, different terrains it operates in, whether it is CNG, whether it is the normal terrain. Also, iQube now is the #1 selling EV. And TVS over the last 3-4 years has been a classic turnaround, better asset allocation, capital allocation, improving margins and reduction in debt, and their export segment is doing well. The bike segment is doing well, the premium segment is doing well, and iQube now clearly the market leader in EV space as well. We like some ancillary link to autos. So Uno Minda, for example, 45% is two-wheelers and 55-60% is four-wheelers. So that's another name we like. Reported very good set of numbers yesterday. 300 crore PAT for the second consecutive quarter. Continues to increase the kit value per vehicle, both for car and two-wheelers. So that's another thing like. And we're looking at some more two-wheeler ancillary names. So we are playing it through that. I'm more bullish on the farm equipment side, the tractor makers, which is M&M. I also expect that some restructuring may happen in M&M this year, with the tractor business, the passenger vehicle business, and overall things changing and clearly gaining market share across. Tractors now they're at 44%. SUVs, I think they've touched 27% as if the July numbers are anything to go by.
Okay, so that's the take on the entire auto space and select two-wheeler counters. Gurmeet, on that note, I really appreciate you taking the time out and speaking with us today. Thanks so much. Let's also welcome on board Mr. Sandeep Agarwal, Fund Manager at Sovilo Investment Managers, who's joining us. And Sandeep, hi, good afternoon, and indeed a good afternoon, because look at the recovery that we've seen in the market today. Yet another session high, 24,570 thereabouts is where we are at. What have you made of this entire move that we've seen today? The resilience with which we started, the dip that we've seen, and the recovery. How are you reading the way the market has assimilated this tariff news today?
Hi, good afternoon, and thanks for having me on the show. So I would only say that, markets are always ahead of time and smarter. And I think the worst was already priced in the way things were panning out from last few days. And generally, I was listening to one of the previous commentators, and he was saying that uh, it is last leg of Trump's, negotiation skill they have seen in all previous deal, that it becomes very tough at the last, and so deal is nearby. So I think markets are making some sense out of that also, but fundamentally, I think a lot of good opportunities available and at good price, and I think now investors are very, very smart. It is not like earlier when we used to, there used to be panic and everything used to get sold. There could be panic for 2-3 days, but people then put their mind together, think, and then come back and they buy what they want to buy, which they would have missed in the past. So I think that is a very, very mature evolution of Indian investor, which we are witnessing in last 1.5 years in a big way.
All right, that's the take on the markets, but we have to mark the stellar recovery because it's Nifty as well as Nifty Bank that is now in the green right now, and what a move. We started the day on a very nervous note. There was a 50% tariff slab that India has actually was announced for, but along with that, what a move from the day's lowest point. I doubt that anybody anticipated that we will have such a great move on the Nifty as well as Bank Nifty. And not just that, you also pull out what kind of recovery we have seen in the mid and small end of the market. There too we are seeing very good moves, because at the start of the day it was just two counters rather on the Nifty 50 that were holding in the green. But it's not just more additions on the Nifty 50 gainers, but the losing side, the percentage decline has actually reduced, and it's just Adani Enterprise and Adani Ports that are reeling a bit under pressure. Barring all that, all the other counters are having a decline of less than 1%. So very good moves. The breadth of the market in terms of the advance and decline ratio, that has also improved right now, and along with that, India VIX is once again back in the green after giving some jitters that it will once again go ahead with that up move, and which will not turn that favorable for all the bulls. But let me welcome Arpit Beriwal as well, who is joining us on the show. And Arpit, what do you make of the market move? Just an expiry move, especially when it comes to Nifty 50? Or do you believe that markets are back in action and we will build on to more gains going ahead?
So very good afternoon to all. As we have seen in last 1 hour, we have seen a stupendous recovery in Nifty, Bank Nifty, and the broader market. So if you look at the chart structure of Nifty on the weekly scale from last 6 weeks, it is forming lower highs, lower structure. But today's move, after a very long time, we have seen a very good recovery from the lower levels. And importantly, Nifty is at a crucial junction, that is 24,550, 24,600 zones level. So our sense is that tomorrow, Friday, being the weekly close, if Nifty manages to close above 24,550 levels, so definitely see a positive closing on the weekly time frame. And then from next week onwards, the range of the market is likely to be in a range between 24,444 to 24,750 levels. So 24,550 would be a very important level on closing basis that you have to watch out for tomorrow. And if Nifty closes up at 24,550 levels, then we can expect some bounce towards 24,650, 24,700 zones.
So those are some interesting levels to watch out for, and well, this is going to be a very interesting week because like Arpit mentioned, if we manage to close positively tomorrow, it's going to be a net positive close for the week. Given the kind of news flow and action that we've seen, it's going to be a good thing to look forward to when Friday's session closes. But still some time for that. Before we do that, Arpit and Sharan, let's come to you for some of the BTST ideas. Sharan, you go first. Now that the market has recovered on a day like this, where are you placing your bets?
Say both my calls today are on the buy side, both slightly on the larger cap side. I like DMart. It has been consolidating in a range, and I think it's on a verge of a good breakout. So you can go long on DMart. The stop loss should be around 4210, target for 4310 and 4360. This can be a BTST and a slightly positional trade also. Secondly, JSW Steel, again from the metal pack. It's on a verge of a big breakout. It has been consolidating in a range for the last 3 to 6 months. And I think it's just testing its descending trend line. It's looking very good on a chart. Despite a weak day for the Nifty, since morning, it's been on a positive note. So go long on JSW Steel. Your stop loss should be on a day low, 1045. Target should be 1075 and 1090.
All right, those are the calls coming in from Sharan. But Arpit, what about you? Do you also have some buy calls on your making to your list?
Yeah, absolutely. And if you see, we have seen good outperformance in selector counters, and one would be from the auto pack, Heromoto Corp. So in spite of market weakness, Heromoto Corp was at day's high, was a classical range breakout on the weekly scale. Retest its previous zone on the daily scale, strong bullish candle, holding well above 4,600 levels. So I think from a BTST as well as from position looks very strong. So first would be Heromoto Corp, can buy at current levels, 4650, 4640 levels with stop loss of 4520 for an upside move towards 4850 levels. Second will be from the new age sector as well as Paytm. So from last 7 to 8 days when market was in corrective phase, Paytm was consolidating on the weekly and the daily time frame. So Paytm is holding well above its 20 DEMA, and in spite of market weakness, the base of the stock is shifting higher. So it's on the verge of a falling trendline supply breakout above 1070 levels. So risk reward is quite favorable. So one can go long with keeping stop loss of 1030 for an upside move towards 1120 levels.
Those are some stocks that both our technical analysts are liking this afternoon. But on that note, we'll slip into a very short break and keep the conversation going on the other side when we return.
Welcome back to Closing Trades right here on ET Now, and as well we are in the thick of the earnings and a lot of earnings to watch out for. And for tomorrow, it's going to be an interesting day for Tata Motors, and let's tell you what the market is already penciling in. So especially when it comes to the volume number, we have seen that disappointment coming in across the board, be it the JLR division, be it the PV as well as the CV segment, because for JLR, the segment witnessed 21% decline on a sequential basis, while for PV and CV, it's been a 50 to 19% decline sequentially on a when we look at the numbers over there, and all these will definitely impact the consolidated figures. And along with that, JLR had its own trouble of pausing the shipments to the US on the back of the tariff uncertainty. So actually factoring in all of that, we are expecting that the revenue could be close to 99,305 crores. EBITDA is expected at 9,938 crores, while the margins on the consolidated front could likely be at 10%. But here the key to watch will be the JLR EBIT margins, which is now expected to slip to that 3.2% mark. But I think will be the key to watch out for, because last time as well the street wasn't expecting a great number, but there was a bit of a surprise on JLR EBIT margins, and along with that the profit is expected at 3,408 crores. So all eyes on that. But apart from apart from the numbers within the management commentary, how will the new top boss of JLR segment specifically will take that segment ahead? What will be the key focus areas for him? That is something that the street will be watching out for. And along with that, how the India CV and PV strategy will be designed going ahead. What is the demand expectation? All is that something that the investors will be keenly looking out for. So that's about Tata Motors. With the markets, the stock too has recovered from the day's lowest point. And Arpit, if you can quickly help us with a chart check on Tata Motors, how do you see that on technical front?
So if you look at the overall chart structure of Tata Motors from last couple of weeks, the stock is in downtrend. However, on the daily scale, good recovery is seen from the lower levels from 635 to 645 levels. So if you look at the chart structure wise, 658, 660 is a major hurdle zone. Until it doesn't close above 660 levels, the setup would be still mildly bearish to negative bias. So 660 is an important level to close out for. Any closing above 660 levels will open the momentum towards 675, 680 levels, where on the downside, 630 would be the major support zone.
That's the take on Tata Motors, and that's one of the stocks to watch out for in terms of the earnings tomorrow. In terms of another important earnings tomorrow, all eyes are going to be on the biggest public bank, and that is SBI, because SBI, along with Tata Motors and Grasim, one of the three companies that's going to be coming out with its numbers tomorrow. Sandeep, your sense on SBI before we take it across to my colleague Varun to understand what we can expect. Sandeep, what are you making of SBI's numbers, and not only SBI in particular, this time around your read through on how PSU banks have performed in quarter 1?
So I think PSU banks will be slightly better off than the private sector banks because of the deposit franchisee and the NIM compression which will happen because of the rate cut which has happened. So I believe that public sector banks do have some advantage over the private sector banks, and that's the reason we believe that SBI may surprise a little bit positively. The only thing which we need to see is that the fundraise which they have done, how they are going to deploy if there is any new vision, any new thing to do, grow aggressively the book something. So we will get more detail on that, and I think everyone is keenly awaiting tomorrow's results and followed by call to get more details on that part, because there will be a compression in NIM for everyone, that is quite known.
So that's the take on the PSU banks and SBI, and well, this is the last banking heavyweight to report its earnings. Then that is, of course, the country's largest lender, and SBI is what we are talking about. Let's take it across to my colleague Varun to understand what are going to be some important ratios to watch out for. What can we expect from the numbers this time around, Varun?
Well, we are expecting a slow growth quarter for SBI. In fact, Q1 has been a slow growth quarter for across banks, with the credit growth in single digit and also declining net interest margins, and the same is going to be for SBI as well. We are expecting the loan portfolio to grow by around 11 to 12% and the deposit growth to be around 12 to 13%. The net interest income will be in lower single digit growth of around 0.8%, and also the PPOP and profitability growth will be in low single digit, although the PPOP and profit would get some support from the overall lower operating cost and also treasury income, but yes, the growth will be subdued. Looking at the NPA numbers, we are expecting the gross NPA and net NPA numbers to be stable, but yes, the overall slippages, they are expected to increase on a quarter-on-quarter basis, especially because of agri loans. Also, if you look at the net interest margin, we are expecting the net interest margin to decline by around 10 to 20 basis points. So it's going to be a subdued quarter for SBI, especially if you look at the overall growth, it is going to be a low single digit growth quarter for SBI as well.
Okay, we're expecting a subdued quarter for SBI this time around. Thanks, Varun, for that. Sharan, if you could give us a quick chart check on SBI, because as subdued as we're expecting this quarter to be, year to date also the stock is up 1.5%, so not much on the stock momentum front as well. What are the charts telling you when it comes to SBI?
So Snehi, I think it's in a consolidation to downwards phase. Again, it did a very big QIPO, 25,000 odd crores. So it made a recent, I think, swing high of around 840. From that level, again, it has corrected to that 790 level. Has seen some action today, but again, results are there tomorrow. So I think the stock will consolidate between that 790 and 830 odd mark. So I think that is also a descending trend line resistance for the counter. if at all the results are good or in any way you see some kind of beat on the results front, I think you'll see some action on the upside. Otherwise, I think it'll consolidate between that area.
Okay, so that's a chart check on SBI. But while we're talking about Nifty companies, let's throw the light on the number that we're expecting to see later today. In fact, in just a short while from now, we'll have numbers coming in from Titan, and we're expecting it to be a decent set of numbers coming in, because remember when the company came out with its update too, it was a decent set of updates that the company had provided, wherein we're seeing that revenue could be expected to grow up 16% at 13,964 crores. Based on our standalone estimates, we're seeing EBITDA at 1,474 crores, which is up almost 22% on a year-on-year basis. Net profit expected to go up a healthy 20% at 925 crores compared to 770 this time last year. And in fact, on the EBITDA margins fronts, we're expecting to see an expansion here at 10.5% compared to 10% this time last year. Based on what they had said in their Q1 update, the overall jewelry growth is expected to be at 18% year-on-year. So it's important to see what the ex-bullion growth is going to be in the jewelry segment, what the jewelry EBIT is going to look like, what is the studded mix going to look like. So all eyes are going to be on some of these metrics from Titan, along with of course their watches, eye care, their emerging business division. Lots to watch out for on that front. But Sandeep, give us a sense on what you think Titan's numbers could look like this time around, and what kind of a quarter are you expecting that Titan could have had?
No, I think already they have given quite a bit of detail in the quarterly update, and we know what is going to come. The key thing is that whether the appetite for this these stocks have come back or not, because these stocks have been underperforming for quite some time because of the valuation and other concern. I think that those concerns still remain. While the numbers, the street was very happy with the update which has come, and we will also be keenly monitoring the numbers. But I believe that valuation concern remains, and the valuation remains elevated. And this kind of market, these expensive stocks, the time to cover their underperformance is much bigger than in normal times. So I believe that we will not see a very big reaction on either side when the numbers come.
Okay, so that's the move expected from Titan, and like Sandeep was mentioning, quite a detailed update is what they usually give, and that gives us almost a sense of what we should be expecting for Titan. But let's pull up the slightly longer term charts of Titan, because Arpit, I want to understand what the stock move has been on Titan in tandem with a lot of these discretionary consumption names, or jewelry players rather. This year Titan is up 5%. It's not done all that much. Give us your sense of how you're seeing Titan shaping up on the charts.
So if you look at the monthly setup from last almost 22 months, the stock has been trading in a range between 3,000 to 3,800 levels. So generally the nature of the counter has been that after a big up move, the stock tends to consolidate. We have seen a one-way move from three lows from 2,300 to 3,800 levels, and post that from last 15 to 18 months, the stock is trading in a band. But the good part is that in spite of market weakness, the stock has formed a strong base near around 3,000, 3,100 levels. And our sense is that till the level is hold above, definitely the stock can slowly, steadily can move towards 3,600, 3,800. So going forward, it's broadly in a trading band between 3,000 to 3,800, but the undertone of the stock is positive, and slowly, steadily, the stock can head towards 3,600, 3,800 going forward.
So that's the take on Titan on the charts, and just a couple of minutes left to wrap up today's trading session. Before we wind down for the day, Sharan, give us a sense of where do you see the Nifty opening tomorrow, given the kind of recovery we've seen today. Could that sustain for tomorrow's trading session? Could we perhaps close in the net positive for the course of the week?
So, I think we were already in a very oversold area. 5 weeks of negative closing. Nobody wanted 6 weeks. If Trump doesn't give any wrong tweet after market closing, I think you can expect a good gap up, and maybe after post gap up, a small consolidation. You don't expect a big gap up around 24,000. 650 to 680 kind of levels, which is also a small resistance around 24,700 mark. So around about that much you can expect a gap up. Today the move has just been crazy, around 200 points of recovery for the Nifty. So it will take some time to digest this move also. So up from 24,700, I think you can expect some kind of consolidation for the next 1-2 days, followed by upside.
Okay, so looking optimistic, and why not, right? Because look at the levels that we have seen on the Nifty. So Sandeep, Sharan, as well as Arpit, thank you so much for your time. We'll start winding down for the day, and we'll hand it over to my colleague Ashesha, who's here with a roundup of the kind of day of trade we've seen today. Ashesha, what a swing and what a recovery, and now above 24,600.
Indeed, what a recovery it has been in the last one and a half hour of trade. Nifty is now ending in the green. Who would have thought in the morning we'll end up in the green? In fact, Nifty is now up 50 points as we speak, nearly at that 24,625 mark. Nifty Bank also outperforming in trade. That one should also come up for you on your screens. 173 points higher for this index, near that 55,600 mark. Broader markets also recovered in the second half of trade. We saw quite a bit of volatility, but what a recovery it has been. In terms of individual stocks, we have Heromoto Corp. That one was up 4.5% on the back of very strong management commentary that we got. Heromoto Corp ending 4.5% higher. Tech Mahindra and Eternal were also some of the other gainers from the Nifty 50 pack. Both of them gaining nearly 1 to 1.5% in trade today. In terms of individual losers, we had Adani Enterprises down 2.5%. This one also ended the day off the day's highest point, down 2.5%. We have Adani Ports and Tata Motors, which were declining anywhere between 1 to 1.5% in trade. In terms of individual sectors, we had Nifty IT index, which was bucking the trend, ending the day with an uptick of nearly 1% as we speak at that 34,779 mark. Coforge, Persistent Systems, Emphasis, all of these stocks were some of the top gainers from the Nifty IT index. On the losing side, though, select real estate stocks were under pressure. So we have Raymond, that one is ending with a downtick of nearly 2%. Brigade Enterprises also is ending with a downtick of nearly 1.5% as we speak. In terms of individual stocks, let's put the spotlight on BHEL. After it reported weak set of numbers, BHEL is ending with a downtick of nearly 7%, okay, 4.5%. That one also recovered in the last hour of trade, but losses nearly doubled on a year-on-year basis, because of which we saw this kind of fall. We have Heromoto Corp, and as I mentioned, management commentary from the con call was very positive. They say that two-wheeler demand is likely to inch higher ahead of the festive season, 4.5% higher for Heromoto Corp. Eternal on the back of a block deal where Anfin Group sold its stake in the company. That one is also ending 1.5% higher. So we had a whole host of individual stocks that were buzzing in trade today, but a solid recovery is what we saw in the last 1 hour of trade. That's all the time we have on this edition of the show, but don't go anywhere. More news and updates will continue on the other side.